Okay, so now we're seeing the market is starting to slow down. How do I know that? Well, I can see that the market has not made a new low. Look at this. We have a tweezer's bottom. So now what I want to do is go back and look and see, is the market in an area where it may reverse? And I can see that, well, sure. I mean, look at this area here. You can see that the market has spiked down, sure enough, but these spikes mean that the market was not able to hold the lows down here. Even here, the market spiked down. It did manage to consolidate here, but overall, in this area, the market merely spiked down and then popped right back up. So again, let's go back in, talk about this as if we were watching it happen real time. Boom, we have another. Now this is a hammer. Now the reason why, again, I'm not going to go into this in depth, but the reason why a hammer is indicating a potential reversal is the market is coming up off of a low. Yes, it did break the prior lows, but look at where it closed. It not only closed above the low, it closed up. It closed above the prior close. So we have an up bar indicating that there's buying pressure down here. One more bar. Again, the market tries to push down. We can see that the lows are making lower lows, but the bars are unable to finish in the low end of the range. In fact, often what I'll put on my chart as a tool, it's simply this little green hash mark, and it shows me the midpoint for each bar. And that to me is really the break point. If the market closes below the midpoint, for example, if for some reason this bar were to close down here, that would indicate to me that it was bearish because it's closing in the bottom half of its bar. But because it's closing in the top half of its bar, that indicates to me that there is some bullish pressure there. So look again, I'm not going to enter specifically using that tool, but I think it's a valid filter to determine whether or not a market is under buying or selling pressure. Okay, so at this point, you can see that the market is probing for a bottom. Okay, now let's go back over here, and you can see once again that it is right in the area. Now remember, at this stage of the game, we don't need to be precise. All we're looking for is an area, even more specifically than that. The question is this an area where it's logical for the market to reverse? And we simply what we have to go by is the past trading activity. Have traders in the past reverse the market in this area? And I'd have to say yes, absolutely. Both up in this area here and also down in this area here. So as we continue on, we have another bar. So now we have a total of 1, 2, 3, 4 hours where the market has consolidated here. Now let's pause for a second and talk about actually trading. I mean, that's what we're talking about here. Up to this point, the analysis has been pretty vague. We're simply looking for a generalized area. Now, when you're trying to make a decision to trade, there are a couple of common ways to do that. One of them is based on pattern recognition. You can see there's really nothing going on here as far as patterns. I guess you could try and draw in a flag pattern like that, but that's, I think, reaching. This is just a low-level consolidation. You could also look for, what I call the tunnel pattern, but you see one up here, but there's really nothing going on for that pattern up in this area. One other way would be to simply take a Fibonacci ratio. Let's see. We've got the market. Now we're getting a little bit more information and some possible tradable information. You see that the market held the 786 level. This, in my opinion, is a make or break point when it comes to Fibonacci